Hey folks, Dan Frio here, the rate update. Today is June 24th, 2021. Some headline news we have is home builders down on new home sales drop. So should we be concerned about the housing market? I don't think so. So don't go away. We're going to talk about that next. Okay, so today we're going to capture two things. We're going to talk about rates, and that's in just a minute. But Diane Olick, she always comes on CNBC, and she's just doom and gloom about the housing business. So check out this video, and then I'm going to rebut it here in a second.
Yeah, it's not just the KB earnings that's bringing the builders down. It's kind of a perfect storm today. First, we got Freddie Mac's weekly average on the 30-year fix at 10 a.m. It showed it nudging over 3% for the first time in 10 weeks. Now, other measures actually have it higher, but builder stocks always react to this weekly report. You see the home construction ETF tanked on that initially, but then did recover a bit. Then you had the May new home sales report out on Wednesday from the census showing the second straight month of declines to the slowest pace in a year, and prices up 18% year over year as inventories are still far lower than demand. Then, of course, we got KB home late yesterday, beat on earnings but missed on revenue. Really, it was the guidance that may be taking the stock down. Q3 came in lower than expected, although full-year guidance was revised slightly higher. Still, the builder, like all the others, is raising prices and noted that continuing issues with tight labor and supply chain are a problem. Now, the builders have been a sweet spot throughout the pandemic as housing demand surged, but they started coming down in May after sales for both new and existing homes began to weaken due to sky-high prices. And, of course, mortgage rates, while still low, they do seem to be edging high.
Okay, so she's basically saying, home sales prices are dumping and this and that, and prices are going to sky. Here, let me just tell you one big factor, and I'm going to do an in-depth video on this tomorrow. There's over 73 million millennials starting to hit their 30s right now, and they have money. Most of them are going to want to buy a house, okay? That's number one. The second thing is, in the past decade, there was 6 million less homes built than any other decade going back to the 70s. And I'm going to show you proof tomorrow. So there's going to be a lot of naysayers down below, but wait to comment till tomorrow. But I'd love to hear your comments about other videos and how you think I'm doing. Okay, so that's one thing that we're going to capture tomorrow on debunking this housing crash. And I started doing it, and I apologize. I started using some clickbait in my thumbnails because I watch these videos that people are getting 10, 20, 30, 40,000 hits, and their videos are just, they're not the best, I guess. I'll just put it that way. There's a lot of good ones out there, but there's a lot that I even get into every day, and I'm like, that had nothing to do with what your image had, or nothing to do really with substance. So that's that for tomorrow. So I just want to give you a prerequisite to tomorrow. I'm going to hopefully get that posted by noon. Okay, so let's get to some of the headlines that I can show you, and I'll debunk these things, and I'll debunk them hard tomorrow. So here's Diane Olick. Home builders down on the new home sales drop. Okay, so take it for what it's worth. I'm going to show you and debunk a lot of that tomorrow. Mortgage rates right now. Mortgage rates are actually lower this week. So that goes back to her comments, mortgage rates are going up and all this other stuff. Yes, they're going up, but they haven't gone up from like 2% to 10% in the last 2 weeks. So that's a thing there. So I'm trying to debunk a lot of these things out there. The economic calendar. Let me show you what transpired today. And there was a sell-off at the end of the day that I just can't put my finger on. And we'll know that later, or tomorrow. I'm going to see if it plays through tomorrow. And I'm going to get to that in a second. I know I'm all over the board, guys. It's been a huge, busy day. We're thanking you guys for all the business. And I've had about 10 cups of coffee. But today you had the gross domestic, the PPI came in. It's right in line. Okay, so that's in line. What these indications here, right in here, is inflation. The consensus on the gross domestic products annualized, 6.4, came in at 6.4. Last month was 6.4. We're okay there. Then we have durable goods, ex transportation, was expected at 0.7, came in at 0.3. Really cool. Durable goods orders, expected 2.7, came in at 2.3. Perfect. Initial jobless claims was expected at 380, came in at 411, hotter than was expected, but the continued jobless claims went down a little bit. Cool. So we like all that data. So there's nothing here that should have caused this. And this is the days chart of the MBS. Okay, so I'll get to that in a second. let's get to where we are with the MBS market for the day. We ended the day -5. That's okay. We had a little bit of a pullback. So let me explain this to those newbies out there, and I'll get through it fast because there's a lot of people that watch daily, and I don't want to just keep repeating myself. What the MBS market is the bond that trades on Wall Street. This is the biggest component of your mortgage rate. Okay, I'll leave it at that. Not the 10-year Treasury, not the S&P 500. It is this right here. Not even the Fed. Okay, the Fed doesn't determine mortgage rates. Let's leave it at that. Okay, so what happens is this is the price of the bond. As the price of the bond goes down, mortgage rates go what? Up, right? Okay, so as you can see, the price went down today, pushing up mortgage rates a little bit. Probably nothing, because 5 basis points equals out in math 0.05. Okay, so you can see here that we had a nice rally a couple months ago, all the way into the Federal Reserve meeting back in May. Okay, again, remember, the price goes up, rates come down. The Federal Reserve came out and inflation fears started to rear their ugly head, and poof, we crashed. Okay, well, look what happened right after that. The next day we recovered a little bit, next day we recovered a little bit more, and we came back up to even better than where we were right in here, but not as good as where we initially were back in before the meeting. Okay, so then things stabilized, we went through, and then what happened again? Fed meeting again, spooked the markets. Federal Reserve Chairman Powell came out and said, it's not all as bad as you think. We recovered. We're not going to recover back here most likely, but we should recover back into this area right here. Why am I saying this area right here? This is where all the averages put us. So if you want to look at this on a broad range, a macro range, you're going to have these lines right here. These are what's called Fibonacci levels. So think of it when you were a kid and you used to bowl, you'd throw gutters until mom and dad put up these little bumpers, and you threw the bowling ball and it bounced in this range. That's what this does, okay? Or it's supposed to do. It's a fictitious line, but it's usually in there for reasons. It'll say, okay, we should run to here and then bounce to here and run to here. Okay, so that's the macro. Let's look at the micro when we really dissect it. We have these other lines, 100-day, 50-day, and 25-day moving averages. If you blend all this, it gives you what those averages are. All of them basically go right to here. Okay, so that's where we should probably move up to and stabilize right in that area. That should repeat basically what it did back here. Okay, so that's in a broad range. So now what happened today, let's look at it in detail. This is kind of what scares me. Okay, we opened the door, we opened up the market, we went up and down and up and down, and then all of a sudden throughout, from about 3 o'clock down, it was nothing but selling almost. These red candlesticks mean people are in there selling this bond, okay? And they're selling, and that's what's going on. So I don't know why they're selling into the close, because our economic calendar really, tomorrow we got personal income. There shouldn't be anything there that spooks the market. Same thing here, personal spending, the personal consumption expenditure. Now this here is basically what the Federal Reserve monitors. They came out and said this. They watched the PCE. Okay, so that might be what everybody's concerned about. I don't know. I don't see this being really anything that should come out crazy, but we'll find out. So tomorrow is all the inflationary numbers that the Fed monitors. I don't see that these numbers should come in really any different than what the consensus is, but only tomorrow will tell. Okay, so let's get on to what rates are right now. So the rates are as of the date of June 23rd. And these are lagging a day. So my apologies for that. And I get this data from Black Knight. What Black Knight does is sends a survey out to mortgage lenders all over the country. We reply and give them what our 30-year rates are. Okay, so these are not my rates. These are a composition of rates all over the country. So the 30-year conforming, jumbo, FHA, and VA. Okay, going back to Diane Olick, she's saying, rates are just getting crazy out of hand. They're really not, and I'm going to show you that in a second. 1-day delta, 7-day delta, and a 4-week delta. Delta means change. Okay, so these are where rates are right now. A day change, there's really no changes. Okay, unless you start seeing, when it comes to basis points, you start seeing 0.1 or 0.125 or something of that. Unless you see more of that, you're really not going to see mortgage rates change. So again, we go back to the MBS market, it's down 5 basis points. It's not going to change rates, okay? So let's get back to this. 3 basis points equates out to math of 0.03. When you start seeing these quotations, it means it dropped. So that means this is 3.2. It's down 3 basis points from yesterday. So yesterday, this would have been 3.23. So I hope you follow that part of it. 7-day delta, basically the same. There's nothing really different there. The 1-month delta, not a big change there as well. So you can see where, you look at the chart and where we've been since February is basically the same as where we are now. Yes, if you missed out back in here, you missed these rates. Okay, they're gone. Do I see them coming back? I don't, unless we have catastrophic events happening in the economy again, and I don't see that. We just went through the world closing down. All right, so that is my video for today. Hope you like it. If you do, please give me a thumbs up, subscribe down below, hit the bell so every time I post a video, you get an alert. So what I'm asking people to do, and we're starting to get floods of these, if you're in a forbearance, call us. I'm going to have an in-depth video next week explaining to you every loan product, how you can get out of the forbearance agreement or what you should do once you get out of the forbearance. But if you're building a house, buying a house, call us. Because if you're building a house, most lenders will not lock your rate for a long term. Max is 60 days. In many states, we'll lock you up to 1 year, so you can hedge yourself against that. The benefit there is if rates do drop, you can have a one-time float down. We can float you down to that new rate. That's kudos to you guys. Okay, if you're buying a house, we have everything basically right here. We can link us, you, and your realtor right on here so we can get you pre-approved right on the spot. And you can correspond. There's chat buttons in this that you can correspond with us, your realtor, and everybody. So we're making it as simple as we possibly can. Our rates are among the best in the country, as well as our fee structure. And my staff is second to none when it comes to knowledge. Okay, so that's that part of it. If you're looking to refinance, you're in a forbearance or not in a forbearance, I got several quotes in today or mortgage statements in today. People are at 4.5%. It's like my first question was, where you been? A lot of people just put their head in the sand and they don't do anything about it. They're like, I don't want to deal with it, or my credit's bad right now, or I've been out of work for a while, or I was in a forbearance, now I'm no longer in a forbearance. So please reach out to us. Let us try to help you save money, making sure we put you into the right program at the right time and lock you in when it's perfect timing for you guys. So how do you find out more about me and my team and how you can work with us? The best way to do that is check us out first. You're already on YouTube. Go to our channel. The Rate Update with Dan Frio, that's here. We just peaked over 14,000 subscribers yesterday. We had another 200 or 150 subscribers added today alone. So thank you guys so much for doing that. The next thing is how you get in touch with us fast. If you want to apply right now, click this button. This will basically take you to our online application. You can do everything. It's 100% secure, and you'll get milestones. Basically what milestones are, you'll know where your mortgage is during the entire process, from application all the way to keys in your hand. Okay, so that's a good way to do that. The other way, if you want to call, give us a call at 844-775-LOAN. Okay, that's 844-775-5626. Or what most people are doing right now, because it's after hours, they find us on, they check out our videos at nighttime or in the mornings or whatever. They're on their way to work, they're at lunch, they're relaxing in bed, just getting ready to go to bed, and they check out the channel. Go here. Set up a consultation with me. You can do a 15, 30, or 60-minute consultation. Just go in there, click it. It'll open up the calendar, tell you all the days and times available. And then at that point, you'll get notifications on how you can call me and get me directly, or it'll give me information on how I get a hold of you. So at that day and that time, you and I will get together and go over any and all the questions that you may have. So that is it for today, guys. Thank you so much for watching. Thanks for subscribing, and you're helping out our analytics greatly on our side. And I hope you find some value in my channel. So God bless. Take care. I'll see you tomorrow. Bye-bye.